Good morning. Welcome to the PCT's launch webinar, How to Implement Effective Transfer Pricing Documentation Requirements, a Practical Toolkit for Developing Countries. On behalf of the entire PCT Secretariat, the PCT partners, and our development partners, we're delighted that you've all connected today. I'm Vicki Perry. I'm a Deputy Director for the Fiscal Affairs Department at the IMF, and I'll be the moderator for today's webinar. Before we start our program, I'd like to just share a few housekeeping rules with you so the experience works better for everybody. The notes are on your screen as well, I believe. We have many participants, so all of the attendees are going to be muted during the meeting so that there won't be any disruptions or noise, of course. You're familiar with this from your last entire year spent on Zoom, I'm sure. But we do want this to be interactive. So when you want to contribute to the discussion, please type a question in the Q&A box. That's the way we're going to handle this. If you don't see the Q&A box, hover your mouse around the bottom of the Zoom window and you should see the option for the Q&A box. Also, if you're connecting through the browser version of Zoom, you won't be able to get the interpretation if you need French or Spanish. So if you need interpretation, you must connect by the Zoom app to access the interpretation. We had overwhelming interest in today's event, and our Zoom registration filled up at some number of hundreds of people, but the meeting's being live streamed, and I believe that Adam has put up somewhere you'll be able to see the link in case there are those who can't join on Zoom. You can send that to people, or and also the webinar is being recorded and it will be put up on the PCT website afterward. Also, this is important for us. After you leave the event, the Zoom event, there'll be a very quick survey that will pop up when you exit, and it will help us to improve future events. Obviously, we would have done these things in person in a different time, but one good thing is that this method has allowed us to reach out to more people, so at least there's a bit of a silver lining there. So enough housekeeping. A little bit more on the substance of this. This latest toolkit release on transfer pricing documentation is a joint effort of all the PCT partners, the IMF, OECD, UN, and the World Bank. And the idea is to provide support to developing countries to implement effective and successful transfer pricing documentation requirements. It'll be a source book, we hope, of guidance on implementing documentation, and it's also going to be available in French and Spanish very shortly. It was released in only last month, January, but it's been in the works for quite a long time. It takes account of extensive comments that we received during 2020, during the public consultation in 2019, which we then worked with during 2020. So the launch webinar today aims to do a couple of things. One is to present the main points from the toolkit and provide a platform to discuss how it can help countries. And I think you'll also find, as we listen to all our various speakers, that it will go a little bit more broadly and talk about transfer pricing requirements themselves a bit more generally. So we have two parts of this, two sessions, sub-sessions. The first one, which we're about to begin, you'll be glad to know, is a presentation by some of the toolkit drafters, Melinda Brown, who's a senior advisor at the OECD, Wanda Montero Coelho, who's a policy advisor in transfer pricing at the OECD, and Colin Clavey, who's a senior international tax advisor at the World Bank. The three of them are going to give us a 15-minute presentation on the toolkit. And without further ado, I'm going to turn it over to them. Following their presentation, we'll have a panel with 7 experts, each of whom will address various questions, and then we'll have our Q&A session. So be sure to find that Q&A slot on your button on your browser, on your Zoom screen. So Melinda, Wanda, Colin, over to you now, and thanks.
Thanks very much, Vicky. Can we get the presentation up on the screen, please? So as I said, thank you very much for that introduction, Vicky, and thank you to all of our panelists and indeed to all of our participants joining us from all the way around the world. It's a real pleasure and a privilege to have so many of you at this webinar today as we launch this toolkit on implementing effective transfer pricing documentation requirements. As Vicky mentioned, producing a toolkit such as this is not exactly a quick process. So it's really great for us who've been involved in it since the beginning to see that there is so much interest in it. Next slide, please. To begin with, just to provide a little bit of additional background, of course, you know that this is an event and a toolkit produced by the Platform for Collaboration on Tax. It's the fourth toolkit that we've released through the PCT. Each one addresses a key issue for developing countries as they relate to international tax. So we've already had toolkits in previous years on tax incentives for development, addressing a lack of comparables for transfer pricing analyses, and also on indirect transfers of assets. Some of you might also know that we have further toolkits in the works, notably one on treaty negotiation, which is progressing very well. As I've already said, it's not exactly a quick process to put together these sorts of toolkits, in part because we really aim to consult very widely with both countries and also with other relevant stakeholders. So Vicky has mentioned the fact that we undertook a public consultation process around about 18 months ago now. So I did want to just briefly take this opportunity to thank those of you who took the time to provide us with comments during that process. We found the input that we received really valuable, and I do hope that you will agree that the final product that we've produced is much improved as a result of that process. Next slide, please. To move on then to the toolkit itself, I want to just briefly set the scene a little bit here and lay out the sorts of things that the toolkit aims to do, and perhaps almost as importantly, the sorts of things that it doesn't try to do, its limitations, if you like. So as Vicky mentioned, the toolkit is designed to be a kind of a source book, bringing together
Entonces, esto se supone que sea una especie de guía con opciones y ejemplos a través del mundo y particularmente para aquellos de países en desarrollo que quieran
documentation requirements. So it's really intended to be a very practical
se supone que sea un recurso
to help them in that process. The toolkit certainly doesn't suggest or imply that there's ever a single best way of doing things.
Que los que implican que hay una manera mejor de hacer las cosas
to help governments to weigh up their policy choices and decide which of those policy choices is right for them and their particular circumstances and requirements and priorities. So the toolkit tries to be as practical as possible, and along those lines, it brings together real examples from, I think we have more than 30 countries, as well as some sample legislation that governments could use as an inspiration or perhaps as a starting point in implementing and reforming their own regimes to their own requirements and their own needs. So importantly, it's I think really relevant to emphasize that the toolkit doesn't set out any kind of a new standard or a new norm. It doesn't propose any requirements that should be put in place in any particular country or any particular context. Instead, it refers back to the existing international standards as they've been articulated both in the OECD transfer pricing guidelines and also in the UN practical manual on transfer pricing. And it tries to look instead at how countries have put those norms and standards into practice in their own contexts. And so I think turning to the next slide and turning over to my colleague Wanda to continue. Thank you.
Thank you very much, Melinda. Good morning, good afternoon, good evening, everyone, depending on your time zone. Thank you for joining this webinar. In my next 5 minutes, I think 4 for now, I will try to provide you with a very high-level overview of the content of the toolkit. The toolkit covers the measures that are typically employed by tax administration to assess true information and data from taxpayer. These are measures that will provide tax authority with the information they need for conducting risk assessment, for identifying taxpayer and transactions for audits, and as well in the process of planning and conducting an audit. It is also perceived that the transfer pricing documentation rule can encourage voluntary compliance by taxpayer. Can you go to the next slide, please? Clear transfer pricing documentation rules can also offer some tax certainty to taxpayer. It will allow them to, or will provide them with a means to describe and justify their transfer pricing policies and to demonstrate how those policies met the transfer pricing requirements that are set in the law. In some cases, a tax regime can be written in such a way that transfer pricing documentation can provide protection against penalty and also can reduce the risk for audits. However, we recognize that the preparation of transfer pricing documentation can be or could be resource intensive and can be costly for taxpayers. And with this view in mind, and as Melinda already mentioned, the toolkit tried to balance the information need from tax authority, but as well minimizing the compliant cost for taxpayer. And therefore, it relies largely on existing transfer pricing requirement that already exist and based on some of the country practices that are reproduced in the toolkit, but also relying on the transfer pricing guideline from the OECD, the UN manual, and as well as the World Bank handbook. And these are, if you can move to the next slide, those elements that are discussed of the transfer pricing documentation will cover or are covered the transfer pricing studies, which are those type of documentation that are required to be maintained by taxpayer normally on contemporaneous way, and that can be submitted to tax administration generally upon request. And here we include the local file and the master file from the Action 13 report. We also present some guides, country practices, and discussion regarding to transfer pricing schedule, which are high-level information and data that will be requested to taxpayer generally on a standardized or a tabular form, and that can be very useful for the purpose of conducting risk assessment. Another element is the country-by-country reporting. For the purpose of the country-by-country report, we rely largely on all the work that has been already conducted by the inclusive framework and all the guidance that has been already produced by the inclusive framework in order for country to be able to implement this element of the documentation on an effective way. Finally, we also present some questionnaire or information requests that can be made on an ad hoc basis and that generally are intended to assist or provide information to tax authority in order to conduct some risk assessment or to try to understand behavior of some particular industry, for example. In less detail, the toolkit also touched upon information and documentation requests that can be made in the course of an audit. And for each of these documentation element, and if we can maybe pass to the next slide, the report will provide explanation, will provide guidance, as mentioned before, relying on the existing guidance on the transfer pricing guidelines and the UN manual, as well as for country practices. And it will also be describing what are the common trend within jurisdiction in respect to several aspects, such as the regulatory framework, including the balance or the decision whether a certain part of the documentation requirement will be included in a primary legislation or in a secondary legislation. It also discusses the issue of confidentiality, which is a very important, is seen very important by taxpayer. Timing issues, when documentation needs to be in place and when it has to be submitted. Enforcement and compliance, a different mechanism put in place by jurisdictions, such as penalty for late filing of documentation, for no filing of documentation, shifting of the burden of proof, or penalty protection or incentive that can be provided as well as an incentive for taxpayer to give consideration to the provisions in the law. Also, we include as well in the toolkit some discussion regarding the tools or ways for accessing to information that may be held outside the local jurisdiction. And lastly, some simplification and exemption. And those elements will be discussed, or those issues will be discussed for each of the element of the transfer pricing documentation that we are describing in the toolkit. So, as I mentioned at the beginning, this was just a high-level picture of the toolkit. We recommend you to go through it, and we hope that it can constitute a useful tool for countries looking forward for implementing effective transfer pricing documentation regimes. And now I'm pleased to hand over to my colleague, Colin Clavey, who will present some final considerations from the authors. Thank you very much.
Thank you very much, Wanda, and good afternoon or good morning to people wherever you are. Can we have the next slide, please? Thank you. We wanted, as drafters, just to raise a number of additional questions and maybe issues that are not directly related to the toolkit, but arose, I think, more sort of policy and other issues that arose during our drafting of this. So these are issues that maybe could be mused upon during this afternoon's webinar, but also maybe to give further thought to further work that might be needed to be carried on in this area. I mean, the first one is to do with the international and regional alignment of approaches. And I think all of us think it's a very advantageous, both to tax administrations and taxpayers, for some sort of international consistency of approach. And of course, we've seen this. There's been moves in this direction under BEPS Action 13 with a common template for the master file, for example, a common template for local filing, and of course for country-by-country reporting. And we were wondering whether there's scope to extend this advantage into other parts of documentation also. We were thinking in particular of transfer pricing return schedules, the schedules that Wanda just mentioned, that many countries require M&E taxpayers to file actually with their return or as part of their return to provide high-level information, mostly for risk assessment processes. And we wonder whether some level of commonality of approach to transfer pricing return schedules would make sense as well. The second one, we want to explore the implication of simplified or formulaic transfer pricing approaches to transfer pricing documentation. We were thinking with your things like safe harbors, fixed margins, amount B in Pillar 1, and really ask the question of whether simplified or formulaic approaches have the capacity to reduce the burden of maintaining PB documentation. We think, for example, for a safe harbor might specify a method, it might specify a margin. And if that's the case, transfer pricing documentation may not need to include documentation of the selection of the most appropriate method or documentation of the benchmarking exercise used to test or establish the transfer pricing margin. The third one, I think an issue that's been raised for a long time, especially from the private sector, is the costs of maintaining transfer pricing documentation. They can, I think, as we know, be very, very extensive studies. They can be very expensive. And some countries countries take different approaches, and some countries have exemptions or simplifications for smaller taxpayers or for lower value transactions. But we wonder whether that international guidelines or maybe international best practice might be established in some of those issues as well. One example might be the necessity to get a common approach for the necessity to revisit transfer pricing documentation every year, whether or not things have changed. Is it necessary, for example, to find a new comparable set every year where the underlying transactions have changed very little? Nextly, another issue which I think we were struck because there was an article we saw recently, which was, I think, came after the documentation package was, the documentation toolkit was published. And it mentioned that the quality of transfer pricing documentation is not always very good. Sometimes it's just a box ticking process. Sometimes it's maybe the minimum is done necessarily to avoid penalties. I think the point was made that maybe more junior staff or maybe do-it-yourself packages are used. But that doesn't mean that transfer pricing documentation isn't always very valuable. I think all of those of us who actually work on the ground in audits know that well-produced documentation is extremely useful. It's useful for risk assessment. It's useful for selecting the specific issues to be taken up for audit. And it's the way in. It's the way into the dialogue to understanding what the taxpayer has done and what their policies are, and the way into the dialogue that takes part during an audit. But I think we also have experience of seeing transfer pricing documentation that is maybe a process, not a lot of thought given to the selection of the most appropriate method, not a lot of thought given to actually what's going on in the ground, the substance of the transactions, and very quick mechanical searches for comparables. And again, just to raise the question, what could be done? Does something need to be done? And if so, what could be done at the level of international guidance and best practices to enable a better quality, maybe more worthwhile transfer pricing documentation? And it's not to say that we don't understand the perspective of business in this. It's quite logical to do this sometimes. Businesses, after all, responding to the law and the requirements laid down by tax administrations. And then the penultimate one, again, one that's been on the table for a while, is access to transfer pricing documentation and country-by-country reports. I think we've seen that the master file does actually assist in quite in a very positive way for developing countries and smaller countries to get hold of good quality information that's produced centrally. And I think it will be the same for country-by-country reports. I think we all think that country-by-country reporting is a very valuable addition to the transfer pricing toolkit. But I think we are aware that some developing countries, some of the low capacity, smaller tax administrations are having difficulties accessing country-by-country reports at the moment. I don't think we have data yet on the accessibility of reports to smaller developing countries and how many reports have actually been received. But certainly anecdotally, and working with the countries that we do work with, that tend to be smaller developing countries, we have seen very few countries that have actually to date received country-by-country reports. And this may well be for a number of reasons, but it's probably not the legislation, but maybe the very extensive, the very exacting administrative requirements that are needed, the various prerequisites that are needed before countries will share country-by-country reporting using the automatic exchange of information. And again, we describe those in the toolkit, and I think we acknowledge in the toolkit that this does create some barriers. And again, just a question for discussion is that are there any ways in which this could be improved? And then lastly, just a general question, is there any further work needed in this area, if anyone may want to raise some specific issues. I'm sure there are plenty more other issues that we haven't discussed here. And lastly, thank you very much. We're extremely pleased that there's so much interest in this toolkit, and we're so pleased that there's so many of you on this webinar. So thank you very much, and I'll hand back to the moderator.
Thank you very much, Melinda, Wanda, and Colin, for the great overview. I think that kicks this off very nicely. We're now going to turn to the second part of our program, which is a panel discussion among 7 experts with a wide variety of perspectives on the transfer pricing issue. I'm going to introduce them very briefly in the interest of time. Certainly I could say a lot more about all of them, but after I introduce them, I'll be posing a round of questions to each of one to each of them, in which they'll be responding for a few minutes. If we have enough time after that, we may be able to have a little interaction amongst them, and then we'll turn to the audience Q&A portion. So here are our panelists. I hope you can see them all. Mr. Michael Durst, who's a senior fellow at the International Center for Tax and Development. Alex Evans, senior international auditor from Canada Revenue Agency. Moses Yadana, who's the head of the transfer pricing unit in the Ghana Revenue Authority. Kamlesh Varshni, who's Joint Secretary of Tax Policy and Legislation in the Ministry of Finance of India. Fernando Becerra O'Fellan, who's International Tax and Transfer Pricing Manager in the SUNAT, the Tax Administration of Peru. Rocio Bermudez, who's Vice Chair, Commission on Taxation of the International Chamber of Commerce and the head of transfer pricing at Repsol in her day job. And Mr. David Ernick, who's a principal in the transfer pricing practice of the Washington National Office of PricewaterhouseCoopers. So I know that we're going to have a really interesting discussion, and I'm going to just launch in and start it off. So first, turning to Mike Durst. You've been writing on the ethical role that stakeholders must play to ensure that multinational enterprises pay taxes in low-income countries. I know that you've noted that a focus on documentation rules can divert attention from needed substantive reforms, including, for example, the simplification of the transactional net margin method that's envisioned in Amount B of Pillar 1 of the reforms that are currently being discussed in the OECD. Could you elaborate on this for the audience? And then secondarily, perhaps to say whether you think that transfer pricing documentation, especially country by country reporting, can foster transparency and whether it will actually result in a fairer share of revenues for low income countries. So that's a pretty big order for 5 minutes, but over to you, Mike.
Okay, thanks, Vicki, and thank you to the PCT for having me here today. And I should congratulate the PCT for having put together a well-organized, useful, and accessible compilation of documentation rules around the world. It's a very good document. You've asked me my thoughts, Vicki, basically about the usefulness of documentation and its place in the transfer pricing world in terms of improving the way transfer pricing rules in fact work. I should say first that I'm a bit of an antique. I was engaged in both private and government practice during the 80s and 90s when transfer pricing documentation was introduced in the United States. And it seemed apparent to me then that the drive for documentation rules had a particular political motivation. Opponents of arm's length transfer pricing rules have been arguing that tax examiners couldn't possibly, in real life, organize and make persuasive use of the immense factual detail that was required under regulations for the proper application of comparables-based transfer pricing methods. Documentation, it was hoped, would solve this problem by organizing large volumes of factual data in a more useful format and would rescue comparables-based transfer pricing rules from extinction. But a surprising thing happened. Examiners in the United States largely ignored the new contemporaneous documentation that companies provided a directive needed to be sent from the highest levels of the Internal Revenue Service that examiners request the documentation from taxpayers and actually read it. Tax examiners seem to have felt that the documentation was of limited use in real life enforcement. Even when organized in documentation, the mass of detailed information provided continued to be more than could be used productively in real life transfer pricing examinations. The basic premise of comparables-based rules that examiners could transform massive amounts of factual information into reliable and persuasive estimates of market level arm's length prices seemed fundamentally flawed. And this problem remains unsolved today, especially as the PCT has pointed out in earlier documents, in poorer developing countries which don't have the resources even to attempt the kinds of extensive factual analyses which the transfer pricing documentation rules seem to call for. Now, over the years, documentation rules probably have improved tax administration to some extent, but I do fear that the rules have also promoted the illusion that comparables-based transfer pricing rules can be enforced more scientifically and effectively than is actually the case. The goal of international tax policy making is to reach a desirable balance between revenue collection on one hand and promotion of cross-border investment on the other. Reaching this balance requires a realistic understanding of how reliably and effectively existing enforcement mechanisms work. I think that over the years, documentation rules may have led the international tax community to understate the inherent limitations of comparables-based transfer pricing rules, and therefore may have impeded balanced policymaking. Now, today, as has been mentioned, promising simplifications to transfer pricing rules are on the table, including, for example, the Amount B proposals of Pillar 1, which would remove the need for unrealistically detailed factual analyses in many cases. Transfer pricing rules will be made more predictable for both taxpayers and tax administrators, and administrative burdens would be reduced. Balanced policymaking would become more feasible. It's good to try to improve documentation rules to make
aprobar las normas
documentation less burdensome to
para
taxpayers
que
and
la
more useful
documentación no
tax
sea una
examiners.
carga muy difícil.
But at the same time, we
Pero
shouldn't
al
let
mismo
focus on
tiempo,
documentation rules divert attention from the Amount B proposals and other substantive transfer pricing reforms, which are long overdue, especially for developing countries with limited tax administration resources. And I should also add, Vicki, you asked specifically about country-by-country documentation. I think that the institution of country-by-country documentation has been beneficial in many respects, but I also think that we shouldn't overestimate the utility of transfer of country-by-country documentation in risk assessment. A good deal of risk assessment can be done with very simple types of information. Really what you need is the global margin of the taxpayer, you need the local margin of the taxpayer, and you need a transfer pricing return that details the related party transactions and the parties that are involved in them. I think there are very beneficial policy implications of country-by-country documentation, but still I wouldn't overestimate its value for improving or making easier tax administration on the ground. So with that, Vicki, I'll turn it back to you.
Thank you very much, Mike, for that typically deeply thoughtful and also provocative introduction to our discussion. I think this background is something that we all need to keep in mind as we think about the issues that we're talking about today. So turning now to Alex from the Canada Revenue Authority. Alex, Canada has in place contemporaneous documentation requirements for the last roughly 20 years. In your view, will the transfer pricing documentation options that the toolkit discusses, many of which are also from the BEPS Action 13 outcomes, improve the compliance landscape? How does the standardization of documentation across jurisdictions assist, if at all, tax administrations and the companies that are filing this documentation?
Thanks, Vicky. Thanks, Vicky. So I think with respect to the first question, how the options section in the toolkit improves the compliance landscape, at the end of the day, a transfer pricing analysis by a tax administration is only as good as the information used in the analysis. Transfer pricing documentation is critical, therefore, because in the context of a robust transfer pricing analysis, you can't see much just by looking at the financial statements or numerical data about a transaction and public disclosures. You need a lot of additional data that you can only find in the transfer pricing documentation. And also, transfer pricing inherently involves or should involve a two-sided analysis. So it's not just the taxpayer in your jurisdiction, but the other entity on the other side of the transaction, the non-resident related party, that is important. And so all that to say, information is critical, and the compliance landscape is improved if the transfer pricing documentation is robust and contains substantial relevant information. So the options in the toolkit help foster some degree of comfort that the tax administrations are able to get the information they need for a proper transfer pricing analysis. So getting into some of the specifics in the toolkit, the options sections that I think were particularly conducive to a compliance landscape that encourages a good flow of information. First, the toolkit section that discusses confidentiality is very important. So for multinational entity taxpayers to comply with information obligations, they must trust that it will remain confidential, given the often detailed and non-public nature of information important to it in a transfer pricing context. For example, in some instances, one of the most important inputs to the transfer pricing analysis may also be a closely guarded multinational entity secret, such as internal comparables. The terms and conditions, including prices paid by arm's length customers, may be the best evidence of arm's length pricing, but may also be a very sensitive non-public data point. For taxpayers to share this type of information, there needs to be trust that it will remain confidential. Also, the toolkit options include suggestions for penalties for failure to provide certain information or reports. And a robust penalty regime can be important to ensure tax administrations have access to information required to understand the multinational entity's transfer prices. Similarly, the toolkit options section discusses accessing documents held outside the jurisdiction. Given the importance of a two-sided analysis in transfer pricing, information held outside the jurisdiction can be very relevant. On the flip side, the options also caution that only information that is relevant and reasonable should be requested. There is a bit of a balancing act, and respect for the taxpayer's time should be a consideration, though not at the cost of the integrity of the transfer pricing analysis. The options also improve the compliance landscape for smaller or medium enterprises that are low risk, such as potentially exempting small low risk taxpayers from the documentation rules. However, that is not to say that any taxpayers are exempt from the transfer pricing rules, which would apply for all taxpayers. And now going to the second question, how does standardization of transfer pricing documentation across jurisdictions assist tax administrations and multinational entities? First, standardization helps multinational entities since a consistent framework fosters efficiency. The same documentation package can be provided to multiple jurisdictions without substantial revisions and special considerations for each tax administration when the tax administrations all expect the same or similar documentation packages. Also, standardization is beneficial to tax administrations since it helps level the playing field with respect to information received in the transfer pricing documentation, which is used as an important starting point for the transfer pricing audit. And that's all I had to say. So back to you, Vicky.
Thanks, Alex. Very useful. And now I want to ask Moses from the Ghana Revenue Authority.
Muy bien, ahora quisiera darle la
What are the
palabra
challenges
a
that your
Moses.
tax administration
Quiero darle la
faces
palabra.
in dealing with transfer pricing cases? Ghana
¿Cuáles han sido sus problemas?
Ghana recently introduced master file and local file documentation requirements, I know.
Yo sé que ustedes han presentado
how do these requirements
requisitos
address some of the
sobre
challenges and information gaps? And we're particularly interested to hear from you since Ghana obviously has fewer resources to spend on this problem than, say, Canada. So over to you, Moses.
Thanks, Vicky, for the question. So in terms of the first question, the main challenges in dealing with taxpayers during transfer pricing audit mainly has to do with the difficulty in getting the supporting details that has to do with the related party dealings. As you all know, transfer pricing audit thrives on information. And so usually the bigger challenge is that most of the taxpayers, you request for information and it's quite challenging to give you information. So information has been a big challenge. Some of them, they will begin to put their documentation together only when they receive the introduction letter to come and conduct an audit. So information flow has been a big challenge. And then the other issue has to do with the comparables, not only local comparables or African comparables. It's been a challenge getting information from taxpayers when we are conducting transfer pricing audit. Then the second part, the new transfer pricing regulation that introduced certain requirements, including the master file and local file. One of the requirements also require taxpayers to mandatorily file annual master file and local files. So what it means is that instead of waiting until tax audit is served on you, the new requirements will put taxpayers on their toes to put all the necessary requirements to maintain contemporaneous documentation. So I believe that the new requirements will help mitigate the delays that we used to face. Then in terms of the master file, which is more looking at the global picture within the multinational, we believe that some of the information that we used to have challenges to look at the company dealings in the global picture will be resolved when we have this implemented. Another thing that we think that though the challenges around transfer pricing documentation has to do with the cost, I believe that looking through the toolkit, it will assist a lot of multinationals in preparing their documentation and also assist us in conducting our transfer pricing audit. So I do believe that the toolkit will assist taxpayers in putting their documentation, which appears to be a cost. And then from the taxpayer or the tax administrator point of view, we should be able to get much information and make it easier. So I think that is what I can say, that the challenge has been the issue of information flow and putting the right documentation in support of transfer pricing audit. So Vicky, I believe the toolkit will assist both taxpayers and tax administrators to reduce the burden of the information flow. Thanks.
Thank you, Moses. That's very good to hear. We certainly hope so, and thanks for that. Turning now to Kamlesh from India. In your experience, extensive experience, how is the introduction of additional documentation, particularly country-by-country reporting, supporting India's risk management efforts and transfer pricing? And also, secondarily, do you think that documentation requirements will help ameliorate dispute management in addition to risk assessment? We'd be very interested to hear your views coming from a huge administration, as you do.
Thank you, Victoria. And first of all, I must congratulate Platform for Collaboration on Tax for putting up this wonderful document. And we could hear from Moses just before me that developing countries would certainly benefit from the discussion which is there in this document. Of course, a lot of further work is required to be done so far as helping developing countries in making use of these documentations are concerned, and which was also pointed out by Colin in his bullet points which he had displayed. So surely, I mean, if time permit, we will come to that later. But to address the two questions that you have asked, Vicky, the first question is that how the transfer pricing documentation and in particular country-by-country reporting has helped India in risk management in selection cases for tax audit. So I can say from our experience that it has been very useful, though India has been a very advanced economy so far as transfer pricing audit is concerned, and understanding the concept of transfer pricing is concerned. But before this action point 13, the only way of selecting cases for audit was a small return. You can, not exactly a return, but a form. We call it Form 3CEB. That form is required to be submitted along with the return. And that form capture it is still required to be submitted. That captures very elementary information like name and address of the associated enterprise, what is the international transaction, what is the amount of international transactions, and what is the most appropriate method. So just very elementary information it used to capture, and we used to select cases on the basis of that. And I won't say that it was a very good, risk audit. Definitely there was a need for improvement, and that improvement did come by the way of country by country reporting and master file. And therefore India was very quick to implement these suggestions, which was very useful. And we have received country by country report from other countries. And for our own MNCs, we have also transmitted country by country report to the other countries. And we have used country by country reports, which we have received for risk audit, risk management in selecting cases for audit. And those audits are currently going on. So we will see what are the results, but our expectations are that results are going to be definitely better than what used to be in the past. So in that sense, it has been really, really very useful. The second usefulness of these documents is that I think that was also referred to by Alex, is that any international transaction has two legs, one in the local country and one in the other country. So our experience was that the documentation that used to be produced before us in tax audit probably had good detail of the FAR analysis so far as the Indian lag is concerned, but probably for the overseas lag, the parent entity, not much information was given. And same experience we also had when we were doing advanced pricing agreement work. And we used to ask taxpayer to come forward and furnish proper FAR analysis for the parent entity as well. And sometime Indian entity used to say probably they are not able to access that information. And this issue is also addressed in the toolkit which you have launched. This is really one of the problems that is being faced by the countries doing transfer pricing audit. And we do hope that with this new documentation, this issue would also be solved. So these are the positive points of the new documentation, which has been mandated by Action Point 13, though it is still, as Colin had said, that some work is still required to make more uniform across countries. Just like country by country reporting, we probably have to work on other documentations also. Now coming to your second question, which was that how these are useful for dispute management. So when we talk about dispute management, there are two parts. One is whether it prevents dispute to arise. And second is once disputes are there, are we able to resolve dispute quickly and efficiently? So the first part is, will it stop dispute to arise? In a way, yes, not completely in the sense, because what we are saying is that this documentation will help multinational to prevent mispricing, because multinational have to prepare these documents. So most likely they would be adopting the internationally accepted transfer pricing guidance and would be reporting the correct pricing. Of course, not in all cases they will be reporting the correct pricing, and therefore we have TP audit. But to the extent there would be an improvement, that means voluntary compliance will increase. So once this voluntary compliance is increasing, to that extent there will be less disputes. So that is a point well taken. And second point is the uniformity of approach. We have uniformity in how country by country reporting is being done, and further work is required for other documentation. So once you have uniformity, in that sense also it helps reducing disputes, because the taxpayer and tax administration are on the same page, and one tax administration and other tax administrations both are on the same page. So to that extent it will help. But then there is also a chance of increasing new disputes for risk cases. what I have just now discussed was cases where taxpayers have come forward and doing voluntary compliance in the right manner, but there would still be taxpayers who would be reporting all those transactions which are required to be reported in country by country reporting in master file, but continue to carry on the pricing in the same way as they were doing earlier. Now, those pricing were not brought to the notice of tax administration earlier. They would be brought to the notice of tax administration now. And when tax audit is carried out, there is likelihood that MNCs or taxpayers would not accept the tax audit. So to that extent, the tax disputes would rise. Of course, those new tax disputes would be in the risky cases and in cases where all countries, the inclusive framework notice that there is a base erosion and those cases must be audited. So yes, to that extent, we can say that in some cases tax disputes would reduce and some cases tax dispute will increase. And so far as tax resolution is concerned, once disputes have arisen, then yes, in MAP cases or bilateral APA negotiations, once you have a common approach for both the tax authorities, then to that extent, the resolution would be faster. So this common documentation process would certainly help that process. Thank you, Vicky.
Thanks very much, Kamlesh. Fernando, I wonder if I could just follow up on a couple of the things that Kamlesh was speaking about. One being the challenges, your reflections on the challenges of enforcing filing of information that's actually held outside your jurisdiction, that is filing with you. In your experience, have the new transfer pricing documentation requirements affected compliance, ideally positively, but either way? And what steps, if any, is SUNAT taking to try to overcome these challenges? So over to you, Fernando.
Thanks, Vicky, for the questions. Thanks, the PCT, for this important event, for inviting the Peruvian Tax Administration to participate and share with you some of our findings and thoughts on transfer pricing issues. Well, in the last years, we have been witness of major changes in international taxation. Around the world, tax administrations have redesigned their transfer pricing policies, and Peru was not an exception. We have introduced new legislation and trained our auditors aiming to breach a $4 billion base erosion gap. So transfer pricing control is relevant for Peru since transactions between related parties and tax havens represents almost 20% of our GDP. So in this regard, transfer pricing rules were applied in Peru since 2001. And despite not being a member of the OECD yet, the subsidiary use of the guidelines is acceptable in Peru. In this regard, in 2017, Peru signed the multilateral convention and became a member of the inclusive framework, aiming to implement BEPS minimum standards. Peru also adopted the three-tier international standard documentation into our own country context. This is why more than 3,000 entities are now obliged to annually submit detailed documentation to the tax administration. Regarding specific to the CBC reporting that you just asking, we're looking forward to exchange it for the very first time in a reciprocal way by this year, which is necessary, but not sufficient step for us in terms of transparency and access of robust information. Action 13 measures will not achieve impact results if the terms and conditions of further reporting are not publicly disclosed. For instance, reducing the 750 million threshold is necessary for developing countries. Moreover, disclosing detailed information like royalty rates, services fee, or loan interest rate, and having access to segmented financial data per entity are relevant for an accurate risk assessment for resource countries or developing countries like us. So, well, I hope that in less than 5 years, we could discuss in a similar seminar like this, an entity by entity, or perhaps a transaction by transaction reporting. I guess that IT solutions that blockchain could make it feasible. So as I mentioned before, Peru implemented a specialized unit on 2014 and focused on large business units, which has audited more than 100 cases per year. I think that this new normality challenged us to approach our examination in a different way. Limited resources, like just mentioned before, demands to rethink our strategies towards one based on a risk assessment, efficient use of information, and selective audits. So in this scenario, country by country report should be considered only one of the several sources in a tax administration's toolbox to identify inconsistencies. An integrity assessment with all the components information should be taken into account. And I think that this is the key utility of this important toolkit that just published. We complemented in Peru, our strategy was complemented with a special measure approach, such as the offshore indirect transfer assets or commodity control rule. And we also introduced in our legislation, actually published for all the stakeholders, a catalog of aggressive tax schemes which tries to discourage their use. Peru was, after the United Kingdom and Chile, the third country in the world to publish this scheme. So I think that all of these measures help the tax administration to enforce his way to try to comply transfer pricing rules in developing countries. That's all that I have to say, Vicky. Back to you. Thank you very much.
Thanks very much, Fernando. So now we're going to turn to Rocio to give us a little bit of the taxpayer's perspective. You've heard from a number of tax administrators and former tax administrators. So Rocio, from the taxpayer's point of view, what are the main challenges? What are your main concerns and even requests that from a taxpayer perspective you face when you're dealing with the taxpayer documentation requirements in all the different jurisdictions where you operate? Do you think the new documentation requirements and or hopefully this toolkit will be of any help with this? So over to you, Rocio. Thank you.
Thank you, Vicky. Good morning, good afternoon, everyone. Yeah, as you mentioned, I'm here today in my capacity as Vice Chair of the International Taxation Commission, and the ICC is the institutional representative of more than 45 million companies in over 100 countries. So my intention is to provide a consolidated and broad view on our experiences, as you mentioned, that from a taxpayer's perspective, we face when dealing with different transfer pricing documentation requirements. Firstly, I must say that ICC welcomes the release of this PCT toolkit on transfer pricing documentation, as additional guidance for developing countries is very useful to reach the common goal of standardization and effective implementation. We believe that the toolkit covers, with the appropriate focus, the main issues that an effective transfer pricing documentation regulatory system requires. In this regard, a strong message of coherence with OECD Action 13 approach is critical, as it's a broad model generally accepted by the vast majority of countries, which has already been proved as sufficient and appropriate to report information on related party transactions and their fair valuation. In our view, there are three key aspects relating to tax compliance, which are relevant for any foreign investment in another country, which are also directly applicable to the transfer pricing documentation regulation. First, the existence of procedural rights and duties of the taxpayer in such country, including the burden of proof, which create an environment of tax certainty. Second, a balanced approach to tax compliance cost. And third, a strong confidentiality rules and appropriate use of information rules. As regards to tax certainty and compliance, we think that it's a cornerstone of the system that should always be based on standardized approaches. And here I'm referring to a clear alignment with the outcome of BEPS Action 13, particularly regarding content of the local file and the master file, since on one hand, it better facilitates compliance to the benefit of both taxpayers and tax authorities. And on the other hand, it lowers compliance costs for the taxpayers and control costs for tax authorities. So we can only see upsides in a standardized system as it generates efficiencies so needed in these challenging times we are navigating now in the taxation world. In terms of requests of documentations, tax authorities should balance very carefully the level of exigence with the capacity to control compliance. And as mentioned before, any request for documentation beyond BEPS Action 13 should be very carefully justified in terms of risk assessment. I would like now move to confidentiality and appropriate uses of information. As regards to the provision of public disclosure of certain tax return data in relation to corporation, the CRA colleague mentioned that before. It's very important to balance the information that can be requested from the taxpayer with the commercial sensitivity of such information. There is therefore a need to reinforce mechanisms to avoid public disclosure of confidential information so that the tax system can be considered as reliable by taxpayers and thus investments are secure. ICC really appreciates the confidentiality conditions that were included on the chapter country by country reporting and developing countries on the toolkit. This level of domestic and international safeguard to the business should be applied to any transfer pricing measure outlined in the toolkit. In particular, as regards to the CBC report, consistent implementation will avoid asymmetries and inappropriate use of information. Automatic exchange protocols of CBC reports need to be in place before imposing duties to the taxpayers. As CBC reports contain very sensitive information, sufficient safeguards and tax certainty on their appropriate use should be provided to taxpayers before requiring the filing or exchange of CBC reports. Accordingly, getting access to the CBC report could be seen as an incentive for countries to join the OECD inclusive framework. It's relevant to remind that the CBC report was conceived as a tool for risk assessment and should not be used beyond that. In conclusion, it's our experience that the TP documentations that better work are those based on standard, balanced, and clear rules. In this regard, a lot of work has already been done by different bodies and should be leveraged for the benefit of both tax authorities and taxpayers. And finally, as a suggestion for next steps and future work within the framework of the toolkit, it could be completed or evolved with reference to the information that tax authorities could ask to taxpayers in the process of negotiating an APA or a mutual agreement procedure, as well as moving forward towards other more proactive approaches to tax review within the framework of cooperative compliance initiatives. That was all. Back to you, Vicky. Thank you.
Thank you so much for that, Rocio. Very, very helpful, very interesting. Now I'm going to turn to David, also from a practitioner perspective, that is somebody who advises companies at this point. What are the practical challenges that transfer pricing documentation requirements pose for you? And what would be your suggestions to facilitate compliance by both taxpayers and their advisors, practitioners like yourself?
Sure. Thank you, Vicky. And thank you very much for inviting me to join the panel this morning. So I would say from my perspective, the number one practical challenge regards complexity. And I'll tie it back to my experience. Before I joined PwC, I was with the Treasury Department in the Office of Tax Policy, and I'd worked on several significant changes to the transfer pricing rules, including finalizing the cost sharing and services regulations from the US perspective. And also at the OECD, at that time, we had just completed the business restructuring project and the project on attributing profits to permanent establishments, which were pretty significant revisions to the existing guidance. And I thought at that time, when I left the Treasury Department, that nothing would really change anytime soon after those revisions. I couldn't see what else would be necessary to change in the transfer pricing rules. And as you know, I was really wrong about that prediction. You know, I had thought I could just read the 482 regulations and the transfer pricing guidelines, and that's all I would need to know for the rest of my career. But there actually have been a lot of changes in the past decade and a lot of complexity introduced. At the OECD level, we've had the BEPS Action 8 through 10 changes to the substantive transfer pricing rules. We've had new documentation requirements imposed, including the master file and CBC reporting rules. I'm one of the firm's experts on country by country reporting, and I've spent a lot of time dealing with the rules, helping taxpayers with them, thinking through, well, what do we need to do in order to be able to file the CBC report? Where do we have to file the report? Will it be exchanged with other countries, or do we have to do local filings? What countries have introduced notification requirements? How are those complied with, and when do they have to be complied with? And country by country reporting is something that, due to the complexity, it's hard for taxpayers really to comply with the rules by themselves. It's hard to see how they could comply without consulting with advisors who are able to survey the countries around the world to see what their CBC rules are. So we've got that. And of course, right now at the OECD, we've got the Pillar 1 framework, the proposed changes to the permanent establishment rules, which might be eliminated. The OECD has proposed using formulary apportionment for the substantive transfer pricing rules, not in place of, but on top of the existing transfer pricing rules, which are based on the arm's length principle. And of course, you've got the unilateral DSTs many countries are implementing, a lot of new substantive guidance to read through, including the UN Transfer Pricing Manual and the World Bank Handbook on Transfer Pricing. So there is a lot of complexity right now, Vicky, and taxpayers do have significant resource constraints just in terms of keeping up with all the new rules and proposals. So I think that's the number one practical challenge. In terms of changes to the rules that would facilitate compliance by taxpayers and practitioners, my recommendations would be based on several themes. Number one would be stability. So I think there have been a lot of proposals or actual changes to the transfer pricing rules and documentation rules over the past decade to try to improve the administration of transfer pricing. But when I look at it from the US perspective and what has actually been implemented in the US, and which of the proposed changes has the US believed important enough that it's actually changed our transfer pricing rules? Well, our 482 and our 6662 documentation regs have not really changed that much in the past decade. We've had proposed regs on aggregation. We've had a new third sentence of 482, but that really just codifies the existing regulatory principles. And we've implemented country by country reporting, but I think not so much because the IRS really wants that data, but more so that US multinationals can file directly with the IRS, which will then exchange those reports with other countries. So from a US perspective, there actually has been a lot of stability. The US has not really made significant changes to its transfer pricing rules over the past decade, in contrast to what's going on in the rest of the world. And from my perspective, that stability is a good thing. That helps taxpayers. Also, I would also focus on things like standardization and uniformity. As Kamlesh said, I completely agree with his comments that those are a good thing to the extent we can get all countries to agree on the same rules. That makes compliance easier for taxpayers. It reduces double taxation. I also think it's important to perform a cost-benefit analysis when introducing any substantive changes to the transfer pricing rules or new documentation rules. I completely agree with Rocio's comments in that respect. And finally, I think I would also recommend a focus on fundamental. So at the end of the day, transfer pricing is really about valuation. It's about pricing. The fundamentals of economic principles have not changed over the past decade. The transfer pricing rules, of course, should be consistent with economic principles. So those are my recommendations for facilitating compliance by taxpayers and practitioners, Vicky, and thank you again.
Thanks very much. Very interesting and very good points. We are, and I want to thank all the panel for their interventions, but we're not letting them off the hook that easily because we do actually have some questions coming in, audience questions in the Q&A. And maybe I could pose, the first one is pretty specific, and the asker wanted to pose it perhaps to Colin, one of the authors. So I'll do that right now, and please try to keep your answers succinct since we only have about 15 more minutes. So the questioner says there's not a lot of experience with audits of master files yet, but there's a need that information written into the local file, the master file, and the CBCR be consistent. And is there room for, or any further work existing to try to progress toward checkpoints that could ensure such consistency? For example, he gives an example, characterization of the entity in the local file and its relative description or its role in the value chain analysis in the master file. Are those consistent? And such checkpoints on consistency, in his view, would help risk assessment considerably. So, Colin, if you're, hopefully you're still available there. I can't see you on my little screen, but over to you for any thoughts on that first.
Hi, Vicky. Yes, can you hear me? All right, I am still there.
Yes,
if
good,
I understand the question correctly, it's really pointing to the usefulness of more standard approaches such as the local file, the master file, and the CBCR, which I think is very much in line with what we've discussed. But it's very much about the detail of the content. Are there other specific items that could be included in those? And I guess that's really something that at some point the usefulness and the content of the master file, local file, and CBCR will have to be reviewed in response to suggestions such as this. And I guess that's really something down to the OECD, whether the inclusive framework, whether they have a timetable for reviewing the current templates that we see in CBCR, local file, and master file. But certainly, there's the sort of suggestions that I see. For example, saying more specifically what is the characterization of the local entity makes a lot of sense. But I think it's a question of the politics and the process for reviewing the details of these documents and changing them. I wonder if either Wanda or Melinda might have some more insight than I do on the possibilities of revisiting these.
Wanda, Melinda, do you have thoughts from the
Melinda,
OECD
Wanda,
side?
¿tienen ideas que pueden contribuir de la perspectiva de la OCDE?
Sure. Sorry, I have the Spanish. Yes.
Sí, desde luego.
As Colin already mentioned, we are currently revising the content of the country-by-country reporting and the scope of the country-by-country reporting. This is part of what we call the 2020 review, the mandate that it was already included in Action 13 report to evaluate whether content will be appropriate now, whether the scope is still appropriate right now. And this is something that the inclusive framework now is currently performing. And we are expecting to have the final review of country by country reporting by mid of this year. In respect to the master file and local file, the agreement at that time when Action 13 was approved was that country wanted more flexibility. We had some initial discussion in particular in respect to the master file when we were conducting the Action 13 2020 review.
Lo que esperamos es una revisión.
We also asked for feedback from the public in respect to the master file and the local file. It is true that from the perspective of business, there is interest in broader standardization, but from the perspective of the countries, they rather prefer to have this certain flexibility that is offered right now in terms of the local file, although there is a recognition of the relevance as well and the importance of having more consistent as well in terms of the master file. But the work so far is focusing on the standardization, is focused mainly on country by country reporting.
Thanks, Wanda. That was very helpful. I don't know if, David, do you have any thoughts on this particular question, consistency across the 3 files, and what would make this work better? If you do, jump in.
Yeah, I think consistency is obviously a key factor, and that's very important that you really tell the same story across all 3 documents. That's one thing that we focus on in preparing that documentation. So I agree with Wanda that is important to have consistency across those 3 reports.
Thanks. Another question, a second question that has come in our Q&A really goes from this fairly detailed level to a more global forward-looking question. Very good question. And the questioner asked if it could, questioner asked if it could be posed to Mike Durst in the first instance, which I'm now going to do, but others after Mike speaks may want to jump in, of our panel or authors. So the question is, in your opinion, would developing country tax administrations benefit more from A, a simplified local TP approach, B, from the complex tax approach of Pillar 1 in the OECD proposed framework, which in a sense, the questioner says, is waiting for the big players to give those smaller countries a piece from the tax slice, or C, through audits of transfer pricing compliance under the current approach? So it's a pretty broad question. I think the simplified local TP approach also brings in the question that Colin posed at the end of the presentation, which was what role for safe harbors, what role for simplification and simplified approaches in low capacity tax administrations. So Mike, maybe I can pose that to you first and then ask others if they have any views on this more kind of philosophical question here about exactly how this should be done.
I think that clearly the most urgent need is for simplified methods. The questioner asked about Pillar 1, and Pillar 1 has a lot of different elements to it, several different elements to it. But the part that I'm excited about is the Amount B proposal, because it would do what I think is really necessary to make transfer pricing work, especially for developing countries, which is to eliminate the need for case-by-case comparable searches in every instance. That they simply don't work. The data available from comparables is simply not sufficient to do a scientific and persuasive analysis. And so things like the fixed remuneration element of Amount B, safe harbors, I think, do have some possibilities, although there are some inherent difficulties in them. Fixed margin types of proposals, which are really similar to the Amount B proposal, I think are the only way to go. It's the only way we'll get a system that's predictable in implementation, that where enforcement is predictable, so we can make some well thought out policy decisions between the level of corporate taxation in the country and the desire of that country to attract foreign direct investment. So I think simplification is the key. We can't emphasize it enough.
Sorry. Thank you, Mike. Any other authors or panelists want to opine on this as well?
Yes,
thank you.
Vicky, yes. So I agree with Michael that simplification is essential, particularly from the perspective of developing countries. And that is what the discussion in inclusive framework has been going, and India has been supportive of that effort for simplification. And India believes that for profit attribution, for calculation of amount A in the digital taxation, probably we need to go for formulatory apportionment, which would be helpful for developing countries. Otherwise, as Michael said, that if you are going to pick up the comparables for each and everything, it's going to be very, very difficult. Thank you.
Thanks. Very good. Alex, do you have any views on this from the point of view of a country that's had these worked on this at a sophisticated level for a long time?
Sorry, I don't think I have any much to add. I agree that simplification for developing countries is critical, and not much to add to that.
Thanks. And finally, we have time, I think, for one last question before we close. And we have one here that this is a rather specific question. And maybe pose this to the authors, Wanda or Melinda, perhaps. Should the CBCR be accepted as it is, or for developing countries, is it subject to verification? If the second scenario is even possible, the questioner notes it will be costly and very challenging for the authorities in developing countries. So really, who's checking these? What's the status of the CBCR and its verification? And I maybe turning first to Wanda or Melinda, and then maybe to Alex or Fernando.
Right, thank you for the question. I think I would also like to hear from probably more the countries that are using and are receiving the country by country reporting in practice. So generally what countries does when they receive the country by country report, if that they will have some validation in the mechanism that the documentation is submitted. So there is some automatic validation of the information that is received through the country by country reporting. So I think this is the first step. It's not, to my knowledge, it's not a process that is exhaustive by the tax authority. However, during the process, let's say when the data is analyzed or is used for risk assessment or for any of the process that a tax authority is conducting, it can verify more in detail this information. But the way that the exchange mechanism and the mechanism for receiving country by country reporting is built, it allowed for certain verification of the data that is submitted.
Thank you. Fernando, do you have any thoughts on that at all?
Thank you, Victoria. No, I agree with Wanda. Nowadays, we just receive the information and verify that integrity of that info, of that data, but we don't contrast with reality, since we are just in a very initial stage. So I guess that maybe next year we will have some results and findings regarding the information that was submitted.
Thanks. Finally, a kind of just very quick follow-up to that. Another questioner following up on the CBC reporting asks that when a headquarters entity is in a country that hasn't signed the multilateral convention on exchange of information, and there's no other instrument for that, the CBC report can be submitted in another jurisdiction where such instruments are in place or where the group has a local entity. Does that raise confidentiality concerns? Rocio might want to speak about that one very quickly. I'm not sure if you have views on that.
Yeah. Actually, we have had some experience in my group. We have had some experiences in the past, not now, because it's a country that has already joined the automatic exchange of information. But indeed, we have to file separate versions, let's say, of the CBC report in the past. I think it was 2017 and 18, and for sure we had some concerns as we didn't have the safeguards of the confidentiality framework within the OECD. So that is why we are requesting the more countries to join the inclusive framework and the more countries to adopt the standard framework, the better for everyone.
Thanks. I see that we are essentially out of time. So I'm afraid I'm going to have to bring this to a close, although it does seem that we could go on for really a good long time more with our authors and panelists and our audience. So on that note, let me just thank all the panelists for this really enlightening discussion and bringing your experiences to this very large audience. And I want to thank all of you who joined us and stuck around until the end. Also, I want to thank the PCT Secretariat for all the work they did putting this together. And just to remind you that the event materials, including the recording, will be shared on the PCT's website. You can certainly reach out to the PCT team or the authors with additional questions and feedback. Do that to the Secretariat through the website if you do have such. Again, after you leave, the event survey is going to pop up in a separate window, and we'd really appreciate it if you fill that out so that we can improve in the future. So thank you again. Wishing you all a wonderful rest of the day or the evening or whatever time it is where you are. And goodbye on behalf of the PCT partners. Thanks very much.
Thank you. Bye.
Thank you.